Before we start, this meeting will be conducted by audio or video conference without a physically present quorum of the Streamwood Park District Board of Commissioners because of a disaster declaration related to COVID-19 public health concerns affecting the jurisdiction of the Park District. The President of the Board of Commissioners has determined that an in-person meeting at the Hoosier Grove Barn, 700 West Irving Park Road, with all participants is not practical or prudent because of the disaster. Commissioners, the Executive Director, staff, and Chief Legal Counsel will not all be physically present at the Hoosier Grove Barn, 700 West Irving Park Road due to the disaster. Physical public attendance at the Hoosier Grove Barn, 700 West Irving Park Road may be limited or not feasible, so alternative arrangements for public access to hear the meeting are available here. At this time, I'd like to call the meeting to order at 7:01. Roll call, please.
Commissioner Armstrong,
Here.
Commissioner Brogan,
Here.
Commissioner Janik,
Here. Can you hear him?
no, I can't hear him. Commissioner Yauer,
Here.
President,
Now, I just want a confirmation that everyone can hear one another. So can we all hear each other?
Yes. Yes. Yes.
Excellent. And just so you know, before we get started with everything today, Commissioner Yauer, we're only going to have you in the finance report do the monthly expenditure payroll since everything else is on new business. And also if we have questions when we're going over stuff, just so we're not talking over each other, I'll try to call each person when there's a time for a question by name to see if they have a question or a follow-up. Is that okay? Good.
Yes.
Let's join each other in the Pledge of Allegiance. Pledge allegiance to the
flag
of the United States of America,
And
to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. I know we don't have Joe here yet, but do we have any other guests, Director Janda?
No other guests, sir. And I checked my email. I checked my phone messages. We've had nobody call in with any comments.
Excellent. So obviously we don't need topics from the floor. So I entertain a motion for approval of the agenda.
So moved.
We have a motion. We have a second.
I'll second it.
And second from Commissioner Armstrong. Roll call, please.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik, Commissioner Yauer,
Aye.
President Wright.
Aye. Next up, we have the finance report. Commissioner Yauer, the floor is yours.
Okay, President Wright, we have quite a few items today. The first one is the monthly expenditures and payroll. And we all received copies of it. Do we have any questions or concerns? Okay, so if nothing, then we move on to the next one, which is a resolution 2020-10-01R, estimated amounts money exclusive of levies for debt service and election costs estimated to be raised by taxation for the levy year 2020. And I think Jeff Janda could give us more details, please. If you have any concerns, okay.
The resolution you have in front of us, by state statute, we have to no less than 20 days before adoption of a levy, we have to determine an estimate of taxation needed for next year, with the exception of debt service payments and election costs. So we tried to look at that. We're trying to look at a 3.8. You remember, 5% or higher, we have to go to truth and taxation, and the CPI is at 2.3 this year. With the CPI at 2.3, any existing property under EAV will be restricted by the county to 2.3. So the difference you'll see a little bit would be in any new EAV that would come on, and then in the special rec handicap fund.
Okay, the next item is the Paderma Employee Health Insurance Plan selection for 2021. Again, Director Janda, if you want to give us some details on that.
Okay, it's the same choices that we had last year, and we decided to stick with the same plans that we offer. There are, in my memo, I do highlight two separate things though. Best practices. We are no longer giving a bonus to people who take the HMO. The HMO is a no-cost insurance for them. And if an employee decides to take the PPO, in the past, it was about 3 to 3.5%, maybe 4% at the highest. It's now 10%, and we're going to look at this every year to try to reassess and be best practice on this.
Can I ask a question? I saw the memo that said that there was a $1,500. You said it was a bonus. Can you explain that?
What I can explain to you is before I started here.
Yeah, no, that's totally fine.
When I started, it came to my attention that if you took the HMO, the district gave you a $1,500 bonus back for taking the HMO. So you had free assurance plus $1,500 a year.
Is there a reason? Do you know?
Could not find out a reason, and it was the people that were before I started. So I was told that was an administrative decision.
Huh.
Don't think that's best practice, so we're making a change on that.
I was just curious.
Okay, so moving to the next one, we've got the 2019 audit presentation. And I believe our auditor is here to give us more details, please.
I don't know if Joe's here yet or not. We might want to move down till he's here.
If we can come back to him, he's at another meeting right now. He's going to jump in when he finishes there.
Okay, okay, thank you. So we'll move on to the next item is the Resolution 2020-10-04R, Cook County COVID-19 Grant Program Authorization. Again, Director Jan, you would please give us some details on that.
Thank you. As you know, the federal government has put out funding for COVID relief. Some of that funding went directly to the counties. Up until last month, there was no mechanism for park districts or townships to secure any of that funding. This county has decided to change that and has made $5,000 eligible for all park districts. We have applied for that. The last piece of this would be the resolution tonight authorizing my signature in the application to be submitted. All of the documentation has already been sent to the county.
Oh, I'm sorry, did you have more information? Did I?
You cut out, Ray.
Oh, okay.
You need me to repeat it?
I think we read it on the screen too, so I'm okay.
This is basically just reimbursement for COVID expenses, right?
That is correct.
Okay.
Okay.
Do we have to submit paperwork for that? We have to do it at work, and I'm just curious as to what we have to do that might be different.
And to give you an example, so the county, we can apply for 5,000, and then the FEMA has another one through IEMA. That's 75%. That's open-ended.
Mhm.
So we have about somewhere between $10,000 and $12,000 in COVID costs now. So the first set of reimbursements are things that are specifically for Cook County that FEMA would not reimburse. So we're going that route first, and then we will take whatever is left, the $7,000 to $9,000, and apply for that through the feds and hopefully get 75% of that. It's a lot of people.
It sounds good. Thank you, Mr. Janda. The next one is the ordinance 2020-10-01-0, declaration of surplus equipment.
Yes, that is a ordinance to declare the truck that we replaced last month for safety purposes, to declare it as surplus so that we can get it off the books and either sell it or scrap it or best practice dispose of it.
Okay, sounds good. The next one is request for authorization for purchase of new Toro Sand Pro bunker rake. So again, Director Janda.
That's a piece of equipment that Superintendent Pick has requested. We have a John Deere unit now that has a $8,000 estimate on repairs that exceeds its value. So he wants to take advantage of 2020 pricing before it goes up into 2021. Also, he's trying to take advantage of the joint purchasing program. So we get best price on that. The plan would be to order it before the end of the year with a delivery and payment in the spring. But that way it'll be in the process. This unit is used to maintain and prepare all of our ball fields.
Okay, thank you very much. President Wright, that's it for the finance report. Unless anyone has any more questions or concerns, that's it. Thank you.
Thank you, Commissioner Yauer. Next up, we have policy planning report. Commissioner Brogan.
We have Resolution 2020-10-02R, First Amendment Activity Policy. Any questions? Being none, Resolution 2020-10-03R, 2021 Open Meetings Act Board meeting dates.
I guess it's when we're going for certification again, we have the person who represents us with 2 alternates.
That would be the next one, IAPD manual
Oh, I'm
meeting,
sorry.
credential certificates.
You're correct.
Do we have any questions about that? And who's going to be representing us?
I'll go
And
ahead.
where's it at? Or it's
Oh.
downtown, right?
Virtual this year.
Oh, it's
Oh,
going
it's
virtual, okay.
Yeah, I'll attend too. Okay. If you want. Okay.
If you want to be our representative, Commissioner Yar, I'm happy to hand it off. But I'll
Oh,
alternate.
no, what I said is I'll attend for sure. If you want me to be the representative, I will be. So the whole thing is virtual this year?
Yes.
Oh, it used to be so much fun. Anyway, no, I'll attend the virtual.
Thank you. I'll be the first alternate, and we need a second alternate then.
Okay. So that being said, moving on to the consent agenda.
Who would be the third? I'm sorry.
And we need a third, guys.
I'll do it.
Okay.
Yeah, I was about to say, Mr. Brogan always comes.
It's virtual. So I'll do it. It'll be Bill, Bill, and myself if needed.
Okay.
Thank you, Commissioner Brogan. Next up, I'd entertain a motion for approval of the consent agenda.
Motion.
Do we have a second?
I'll say
Okay.
I'll say it.
Roll call, please. Sherry, roll call. Consent agenda, you're muted.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik,
Said aye.
Commissioner Yauer,
Aye.
President Wright.
Hi. Okay, next up, we have correspondence. Anybody have any correspondence they wish to share? Okay. Seeing none, we move to.
Hold on, Rich's phone is cutting out. Rich, why don't you just come over here and speak from here? Just leave your phone there.
I just wanted to mention that for correspondence, we are having an election this year that's a lot different than others. A lot of the precincts were consolidated. Instead of being 2 precincts at Streamwood High School, where I'm going to be an administrative judge, there are 5 precincts there. So if you haven't voted yet and you're looking to go to your polling place, you're going to have to check it out to see if it's changed. The precincts in Streamwood High School are 1, 2, 21, 25, and 40.
Thank you, Commissioner Janet.
Okay, thank you.
Okay, Director Janda.
Get to the end of the new business.
Elizabeth, can we do the sway? Okay, October 20th, 2020 Sway Report for the monthly meeting. We are following the Illinois Department of Public Health mitigation guidance. As you know, effective October 28th, there's several changes that affect not only Cook County, our area, but Kane and DuPage. Our positivity rate for our area is currently 7.7% on a 7-day rolling average. Mentioned earlier, we are applying for Corona relief funds through Cook County with a maximum award of $5,000. Upon completion of the resolution tonight and submission of the IGA, will be up for consideration. We're also working on our FEMA application. We've incurred more than $10,000 to date in COVID-related material bills. Several staff members have been quarantined related to the virus, and we continue monitoring all staffing and related issues. To my knowledge, none of our working staff have had it, though. We also have a strategy to safely reopen the Park Place Center locker rooms. Limited number of lockers are designated in both the men's and women's locker rooms. All their lockers are secured with zip ties, reducing the area that we need to sanitize on an hourly or daily basis. Membership lockers are also available following the same scenario, and we're supplying sanitation solution and towels for those areas as well. Recreation, we have an outdoor movie this week, night before Christmas, in conjunction with the library on the 30th at Hoosier Grove. Trunk and Treat will be on the 29th at Park Place Recreation Center. It's sold out with 89 participants. Obviously, social distancing and group size restrictions are extremely limiting us, so we cannot take any of the 50+ people that are on the waiting list. Pumpkin decorating contest is also going on. Those winners will be coming up soon. The Halloween decorating contest last night for the homes were taking place. The best decorated award was 25 Jackson Lane. Most pumpkins, 311 North Altendorf. Judges favorite award, 7 Magnolia Court. Scariest award, 106 Somerset Drive. I was also told they're offering a free haunted house in their backyard. And then there's also an honorable mention for best
It
theme.
was terrifying. I wouldn't go.
And by the way, thank you for
That
judging
was
that.
awesome.
No, it was
That's
terrifying.
At 500 Wellington Drive. Moving on a little bit, fitness center usage for the month, 2,171. Weekday average is about 108.5. Weekend totals, 371 with an average of 46.4 for total usage of the fitness of 2,542. Lap pool usage, weekly total, 719, average of 36 a day. Weekend total, 152 with an average of 19 for a total of 871. The U46 collaborative at this point has been put on hold as we go back and forth on mitigations. Preschool continues to be strong with 25 students, 12 on site, 6 via Zoom, and 7 at home with curriculum materials. Girls volleyball scrimmages began this last week. We have figured out a way to live stream it on Facebook to give parents a chance to watch. Indoor soccer begins October 26th. 20 participants and 1 parent per player will be allowed in the gym. Registration's going on for basketball. We envisioned 50% of last year, which is a total of 80. We are also prepping the community center for rentals beginning in November. Obviously, with the roof leak, that's going to be contingent on making sure it's safe. Cultural arts and preschool. Starlights have received a sponsorship from Star Smiles Orthodontics. Very nice of them. Thank you on that. Starlights is also holding a fundraiser October 26th through November 13th. Tickets are being sold. They're available at Park Place. Last night, they also had a fundraiser at Andy's Custard. I understand it went pretty well. Rec and marketing staff have completed a cultural arts sponsorship packet. I know that one of the spots has already been sold. Aquatics and fitness. Believe it or not, we've had to hire a couple additional staff for fitness. We had a couple part-time employees working too many hours during the week, so we had to cut that back a little bit. We've adjusted swim team hours for elections next week, and we had 29 hours this past week where we had no lifeguards available. It does save us some costs, but it's something we have to monitor. Hoosier Grove Barn, we booked 1 wedding for 2021, and we hosted 1 wedding and 1 family event last weekend. Department information, they're working on details for elections next week at Park Place. to make sure that we have safe distancing, proper traffic flow, everything such. We're also working with the 110 cost recovery system, the ways that we can look at reducing our costs and improving our bottom line moving forward. Any questions so far?
Jeff, is there any bet with the new guidelines put out by the governor this week? Is that affecting any of the weddings and events at?
We will. We are going now from 50 down to 25 and as our limitation at the barn.
And then I'm also curious because now basketball all of a sudden now is a high risk sport from what I read today. Does that affect the program that we're hosting?
As long as we can maintain the social distancing in our basketball at this point, it'll be okay. But by the number of people we allow in there.
Well,
Commissioner-
didn't the governor say about basketball, only because I'm the athletic director at our school,
They
that
just announced it.
they just moved it to high risk, so no scrimmages. It can only be, it's that level 1 sport or the
Okay, we
level
will
1.
Check on
Yeah,
that tomorrow then.
I think you might need to look into that a little bit
Be
because
glad to.
we need to change our programming at our school based on the governor's announcement this afternoon.
Thank you on that. We'll double check
Mhm.
that tomorrow.
Yeah.
I'll have Jake on that first thing.
Yeah.
Trunk and treat, like I said, we're gonna have social distancing and everything spaced out. So we should be okay with that for the weekend. And the movies right now, we have 4 cars scheduled for each movie. Keep going, please. Okay. Our annual Fecon rental started today. That's where we use a machine to clear unwanted invasive brush. I know they were starting at Countryside, Marquette Woods, and several other ones. Proud to announce that we've been planting native perennials throughout the district, including administrative and Hoosier Grove areas. That helps us lower our cost of our annual plants every year. Brush cutting was completed at Shady Oaks and Dolphin Parks. We've been removing unwanted weeds and unwanted material around Park Place patio. All the Safety Town buildings and their foundations have been removed. We will be looking to fill in those areas. We have to haul some of the asphalt still off the site. Proud to admit and state that the painting has been completed at Hoosier Grove. Both the museum and the silo are freshly painted. Grease traps were cleaned out at Hoosier Grove. They're required to do that annually. The windows are being replaced at Hoosier Grove barn offices. That's replacing some rotted wood frames. The spa line at Park Place has been repaired. We've also, this is something that was a life safety issue. We have tied in our server, phone system, and elevator power into the generator at Park Place. So if we lose power, we will not lose phones throughout the district, nor will we lose servers. And more importantly, people will not be stuck on the elevator. So we're happy to hear that. New countertops and sinks were in the budget. That's been taken care of at Hoosier Grove as well. Sundeck has repaired some floor at Sunny Hill Park, and that's under warranty. The new F-50 came in, so staff is thankful for that. They're planning for snow season. They were working on that yesterday and today as well. They attended a parking lots and sidewalks de-icing workshop. There's been some IPRA facility management programs. Cyber risk awareness through Texas A&M. That was an excellent program. Several of us attended. And that was virtual. We didn't go to Texas, by the way. And Commissioners Park should have a parking lot asphalt laid down next week. The CXT restroom is scheduled tentatively for 11/16. We're hoping the weather holds off so we can finish some of this up. Any questions so far? I'm going kind of fast. Okay. What we have embedded here, and if you can play that for me, Elizabeth. I know it's hard to get out to the site. So we've included a little drone footage if it works. Commissioner Janik, if you want to see this over here. Weekly, we have drone footage taken of the construction site so we can track the progress and also for historical record. What you're seeing now is the new parking and thoroughfare that'll go out to Myrtle Lane. On
Have
your
we had-
left is a new path that weaves through the park. Okay, Elizabeth, if we can go to the other one.
I'm trying to get it to scroll. Hold on.
This is more the exciting one. That's the new Polygon shelter going up. Behind that is the new playground. To our left, you can see the area of the tennis courts and the asphalt going in. Football fields in the background. Detention pond is behind that. Now you're starting to see the challenge course coming in. Behind the challenge course then is the basketball court that's not finished yet.
That's the overall completion date.
We're scheduled now to be completed November 16th, weather permitting.
With everything. It looks like there's so much still left to do.
Oh, there is.
Has there been any complaints from the neighbors? I think it looks amazing.
The neighbors so far had a couple ask about replacing some trees, some fencing.
Yeah,
Everybody's liking it so far.
that looks great.
Can't believe how quickly it's improving. Quite a bit done. Looks good.
Is this video on our website?
We've been uploading them. This one may not be yet, but we've been uploading them consistently on Facebook.
Oh.
Instagram as
It's a
well.
lot of, it takes a lot of memory.
Oh, sure. Well, it's 2 minutes long, so.
So it's on Facebook, you said?
I'm sorry, what?
Is it on Facebook? You can see it on Facebook?
Some of it is, not all of it is.
Okay, okay, thank you.
Okay, Elizabeth, thank you on that.
I'm still trying to scroll.
Social marketing, virtual winter program is in the process. We will be going back to postcards because of all the changes. We hate to spend a lot of dollars on a printed project only to have it canceled or changed. This way we can be real time with it and change it. We're also, the banners, printer, scanner equipment that we ordered came in. That'll allow us to do our own banners and posters in-house. It's also going to allow us to digitize all of our construction drawings, plats of surveys, things like that into digital format. If we were to try to do that piecemeal, it would be cost prohibitive. Every month I put in here our social media. I won't go through all of this, but this is just, we monitor a snapshot of how all of our website, our tweets, everything is going. District financial notes. So I just want to spend a little bit of time on this. Joe Julius, our auditor, will be on tonight. We've been working with our bank to secure our EFT and NFS notices that are currently coming by fax, changing that over to encrypted email for a little more security. We've also been notified by unemployment consultants, a little good news, that all COVID-related unemployment claims are going to be either picked up by the state or the federal government. So where we would be facing a $91,000 bill for unemployment, at this point, we will owe nothing on that. We have been trying to track, as you know, on a monthly basis until inform the board of what's going on. So I have a few charts in here, but in the charts you'll see as we go down a little bit more, Oh, gotta go back up a little bit for me, Elizabeth. Gotta go back up a little bit. Okay, so we did a comparison from March and April of 2019 to March and April 2020. Since that's in the prior fiscal year, we had to do that separately than May through September because of the fiscal years. So when we look at March, we had a variance of 9.2% overall revenue expense with an unfavorable variance. So we were 23,609 worse position in March of this year than March of last year. April, it's a variance of 26.63% with a unfavorable variance of cash value of 59,790. As we move forward a little bit, looking at May through September, and we start seeing expense reductions that we have taken in-house, we've dropped an overall variance to 12.39% with a variance of 356,911. Large of that is attributed to COVID. We have several staff positions that are currently open, including horticultural supervisor, pool manager, a facility supervisor, which we actually eliminated the position for lack of work, HR manager, night custodian, and we have 2 recreation managers currently job sharing. Estimated savings, if that were to continue through the entire fiscal year, will be 181,000 plus benefits. COVID payroll deductions that I show you every month are in one of the following charts. We're still at $26,000 less than our pre-COVID normal payroll wages. Okay, let me see if I can do my screen here. So here as we look at, this is a picture of our April variance. So corporate, if we take our revenues and expenses, add them together and compare them to last year to this year, we'll see that we're $105,000 in worse position, or 33% just for corporate in April. Recreation, we dropped huge, but you have to remember some of this is timing of taxes. So that becomes a concern. If you can scroll down, please. Here's the March variance, same thing. Corporate, our activity was down 66,972 from last year, 16.75%. Recreation is a $255,000, 858 drop. This is when COVID just totally shut us down, so it was an immediate hit. Go down, please. These numbers are kind of offset when you look at the capital, but I try to keep capital separate on that. So now we go to September. So this is where we start looking at from May through the end of September. So you'll see that actually our corporate now, our variance has improved to 0.46% with a favorable 4,744 total. Recreation has jumped up to 16.89% with cash positive 76,383 for this period. Where it hits us for the negative 12.39, if you go to the very bottom where item 11 CIP, that's our capital funds, you'll see because of the projects we got going on, we have expended 968,950 since the beginning of the fiscal year as compared to 542. So that negative 78% has a strong effect on the overall 12.39. These calculations come straight out of Encode, so I can't really change the way that they're formatted. If you can go down a little bit more now. So since May 1st, expenditures in corporate to the same period have been reduced by 26.12%, recreation by 50.29%. That's in these charts here. And Social Security, because of lack of staffing, has dropped by 44.31%. We combine our expense reductions in these 3 funds. We've reduced our expenses by over $900,000 since May. I highlighted these because these are the ones that we see the most and have the most effect on us. Obviously, the museum, we're in much better shape because the museum hasn't been open. Audit, we haven't received a bill for. Special recreation is a contracted share that we know what it is, doesn't vary. Insurance and liability, we lowered our levy last year, if you remember on that. So that number is going to look worse than it actually is because we lowered the income coming in. In IMRF, since the beginning of the year, we are 55.6% variance. We've gone from, we've got a $14,000 favorable variance on that. Questions so far? I know it's a lot of information. If you can keep going, Elizabeth. So every month we show you our normal operations versus COVID. So a typical normal operations, we had gross wages of 84,355, net wages, IMRF, and taxes across. Every month we've been tracking by payroll. Can go, keep going. So if normal wages, 15 payrolls would have been $1.2 million. With COVID wage reductions, we're at 800,000. So we've seen a wage reduction of 455,000. Even in IMRF, we've seen a reduction in wages of 22,311. Administratively, mentioned last month that we have won a Best of the Best award for our work with Alignment for Collaborative Education. There will be an IPA broadcast of the event on November 11th. So I'll get everyone the information on that. Tax levy is nearly complete based on tonight's actions. We still haven't heard anything on our 2 park grants or Rebuild Illinois grant. Staff has been meeting with NovaCare Physical Therapy to replace Sherman Hospital, which has decided not to renew their lease with us. There is some strong interest there, so we're hoping that works out very well. Lastly, we have Little Creek. We have several parties that are now interested in trying to take over the operation, and we have 2 more that are calling us. So lastly, in my report, I want to recognize several staff anniversaries and thank each of them for their dedication. If you can scroll down a little bit. So all of these employees have been here from a range of 35 years down to 1 year. They're what's the heart and soul of our district and what make everything function. So I want to congratulate them. Obviously, I couldn't ask them to come to the meeting tonight because of COVID, but we will make sure that they're formally recognized and thanked for their services. So any questions? Any questions on the finance that I gave? Do you want to back that up a little bit, Elizabeth? Like I said, I know it's a lot of information, but as you can see, we're tracking it and trying to do comparisons of where we are from a year ago. We're in a new world.
No doubt.
Joe has arrived.
Any other questions?
Joe Julius is here.
Yeah, good evening.
Hi,
Good
Joe.
evening.
How are you?
Good, good.
The beard and the hair.
Yeah, really. It's unwieldy. I always go to the barber and say, I don't like to comb my hair, get it done. And now it's been since February, so I'm overdue.
That's the new COVID look.
That is it. That's it. That's like COVID-19.
COVID-19 look.
Oh, yeah. It probably the last time you see it, so no pictures.
Okay, well, I think we're ready for you, and you walk through your report with us. We greatly.
All right, very good, very good. Good evening, everyone. Thanks for taking me. I just came from another Zoom meeting. It happens every year. Tuesday's a busy meeting night. So here we are. So we're going to start out with, I'm going to give a presentation. And of course, anyone has any questions at any time, just, I used to say raise your hand, but right now you just got to speak up. Everyone should have the audit report in front of you. We're going to start at page 50. And page 50 is the schedule of real estate assessed valuations and tax levies for the last 4 tax years. Remember, in the state of Illinois, we're always a year behind. Okay, so the tax levy for tax year 2018 is collected in in calendar year 2019, which is March 1st, and the money's due March 1st, and this year was due in July. Also understand that Streamwood is the only entity that I know in Cook County that takes the tax levy, that the money they collected in March, so the money you collected in March 2020, you don't count as revenue until May 1st. So with the levy being about $5.3 million, that money you collect in February and March, about $2.5 million is deferred until this year. So it's a very, very conservative position. And it's a good one. We accountants like that because that means a lot of people are running out of money until they get their money in February and March, and your district is, again, very financially strong. If we look at the schedule assessed valuation across the top, we see that the last 4 years, 2019 was up 15%. The assessed valuation was 2008 was 708 million, and then 2019 it's 814 million. Remember, the assessed valuation is the assessor's value of all the property within the district, all the property that you can levy your real estate taxes on. This was a triennial year, which means you can raise the taxes on it every the county assessor raises the assessed valuation every 3 years. If you look back to 2018, you're only at 708, and you look at 2017, 2016, 2016 was higher than 17 or 18, which is very typical. The first year of the triennial, you have a high rate, like this is $814 million. The next 2 years will show a decrease because the county assessor has a procedure. Well, it will not increase your assessed valuation unless you build something or do something like that. But if you protest it and appeal it, it will decrease the valuation. So again, here, 15% up. If we look at the tax levy for 2019, $5,338,000. It was it's a 1.95% increase. So you see the tax rate actually went down with the valuation of property up 15%, and you're only asking for a 2% increase. The tax rate went down to 0.6560. So again, the total tax levy here is about $5.3 million. And that is amount for 2019 that you collect in calendar 2020. You currently, in the next couple of months, you'll be doing your levy for 2020, which of course, I know you're working on, and of course, we're still subject to all the tax. The rest of the schedule shows the allocation, also shows the deferral. Again, so the takeaway from this, assessments are up 15%, tax rates are down, and the tax levy itself, the amount of actual taxes a taxpayer should pay that he would have paid this past summer would been up about 2% from the prior year for park districts. Okay, you look at that, taxes are kind of the lifeblood of the district. If we go to the financial analysis, which is a separate 4-page presentation, it shows the tax levies, and taxes account for about 72% of the revenues of the district. Okay, there are some districts now that are hurting tremendously because they're dependent on service fees, whether they have a enterprise fund with some kind of recreation center that brings in mega bucks. You guys aren't too bad. 72%. I have districts that are higher, 75, 80%, but the 72% means that the taxes you collect are pretty much going to take care of your income. Of your expenses. Now, to start off, maybe I jumped ahead a little bit ahead, but the big issue, of course, this year is not this past audit, but what's happening in 2020, 2021. This audit, of course, was through the period April 30th. The pandemic started sometime in March. So basically, all of this audit year was really not too dramatically affected by the pandemic. For 2000, and the current year is, of course, a big difference. Who knows? Who knows what's going to happen? When we're going to be back? When's the new normal going to be over? And I think that's going to be. It looks like it's going to be quite a while. I heard the head of Chicago Schools, CPS, the other day said it could be a year or 2 years before the kids are back full time to school. So it's a big change. In dealing with Sherry and Jeff on the financials, and I know Jeff has done a big presentation on this. The the good news is you're doing better probably under the pandemic than without it, meaning that your revenues have decreased, but your expenses have decreased even more. The handout, I don't, Jeff, have you done your presentation tonight or?
Yes, you just missed it.
Oh my goodness.
I can go back and do it again.
Well, okay, you see that the savings and the salaries and whatnot, and of course, that's where it's all at. And you guys have been very proactive there, jumping into action and saying, look, let's reduce our expenses to keep control of all this. And that's where it's all at. Some districts didn't react as quick, but I think now people are beginning to realize we got to control expenses. But back to the financial analysis, we see, again, the tax levy, about tax receipts, a little over $5 million. The other fees and charges, $848,000. And then rentals, $650,000. So total revenues for all funds was a little over $7 million. Okay, that's a little bit of a drop from the prior year, about $160,000. And that would be, I think, primarily, that could be the last couple of months of the pandemic. Expenditures, we see capital improvement expenditures are up about, we're actually down 237,000, but total expenditures for the year had a slight decrease of 224,000. So your expenses went down. That was primarily because your capital improvements went down. During the year, you issued $1,592,000 of bonds. And so the bottom line here is your fund balance at the end of the year, April 30th, 2020, was $4,336,000. So that in expending about $8 million a year, that tells me you had probably about 4 to 5, even 6 months worth of surplus. And then if you add in your other money, so you have a nice surplus going on here. So again, this is what I call a layman's profit and loss for the year. Park districts don't have profit and loss, but if you had it, this would be it. Again, the takeaways here is taxes, 72% of your income. Your other expenses and other revenues are in line with the prior years. The second page is the corporate fund, and then the third page is the rec fund. Those are subsets. Those are just breakdowns. The total page we just went is really the summary of everything. And again, the corporate fund and rec funds are presented here in case you have any interest. In fact, the audit report is chock full of all this type of information for the district for you guys to monitor. If we turn to the audit report itself now, this is for the year ended April 30, 2020. It's what page 1, the independent auditor's report is my presentation, my professional report, my professional opinion that says that we have come in, we did it remotely, that we've audited the financial records of the district, and we find that this report is a fair presentation of the district and its financial activities for the year ended April 30th. Again, it's a clean report, meaning that clean opinion, meaning that there's nothing that we found that would lead us to believe the financial figures were not a fair representation of the district. Page 14, statement of revenues expenses. We gained some of that earlier, but the reason I point out this schedule today on page 14 is that we look at the bottom line and the fund balances. How much money do we have left in these funds? We see the far right-hand column, $4,336,000, which we saw before. That's our real estate, our reserves that the district had as of year end. And that, again, that's a pretty strong figure. But if we look across the bottom, general fund had $1,516,000 surplus. Recreation had a deficit of 222, and then the debt service fund had 243. And here's the big one, capital improvement, $2,157,000. So about 50% of your surplus was being held for future capital projects. And the last column there is governmental funds, $641,000. Okay. Again, this is a breakdown by fund. It's the same with the financial analysis you saw a little earlier, but it gives you a little information, specifically what happened in the current fiscal year 2020. The next thing that follows after that is we have footnotes, and it's funny. I was talking to a director earlier today and they're telling me that the liquid assets funds, the Park District was paying 0.02% interest. I said, you gotta be kidding me, you know? Sure enough, I went online and looked it up and that's what it is. So the interest income that you're gonna be receiving in the future years is very, very minute. If you look on page 23, the bottom of 23, we have a deposits and investments. I like it. You have Illinois funds and IPD, LAF, liquid asset funds. At the end of the year, you have about $7 million. Yeah, almost $7,943,000. Now, one might say, well, Joe, how come we only have a surplus of $4.5 million? We got almost $8 million in the bank. The difference is that March payment real estate taxes that you receive that you're not counting as income, so it's not counted as part of the reserves. That's considered a deferred revenue. I'm asking people to be very careful what they do with their money. This pandemic, who knows what the economy is going to end up doing, but with your money invested in the liquid assets and the Illinois funds, you have two state sanctioned investments. So you shouldn't have any issues with if a bank had a bad, made some bad loans and had to go bankrupt or whatever. You guys should be unscathed by all of that. Okay, but that again, that's the deposit. Again, don't expect, and it's just, I have a personal account at Chase Bank. I laughed at 0.001% interest income. I'm like, really, but that's the way it is. They're not paying interest. And the rumor is that maybe someday we'll have to pay the banks for holding our money. They not only will not pay us interest, but we're going to have to pay them. But we'll see about that. Page 26, capital assets. You see here, this is a presentation of the assets that you have, the additions column and deletions column. During the year, you added $1,058,000 in additions. Remember, this is historical cost. This is not appraised value. If they came through and appraised your properties, you certainly have a lot more money than that. A lot more in assets. Page 27, IMRF. Down near the bottom, you see the number of people that are in your plan, retirees and beneficiaries. Right now, the IMRF fund is paying out to 35 different individuals, retirees or beneficiaries that at one time or another worked for Streamwood Park District. There's another 47 members who have worked for you, but right now aren't collecting anything. And finally, there's 34 members who are active. That means they're on your payroll and they're currently putting into it. The total covered payroll for the year was $1,492,000, about $1.5 million. That's how much money that the employees who are employed by the district and their members of the IMRF had to pay into the fund. Page 28, the next page, contribution rates, the top of the page. In 2019, the employees had to pay in 4.5% out of their paycheck into the fund, and the district had to match it. 2019 was 9.71%, and 2020 it's gone up about 0.6% to 10.31%, which is pretty nice. It's pretty low. I see a lot of them still at 12 and 15%. Of course, that goes up or down based upon what the actuaries say, and it's highly dependent upon the stock, the investments IMRF makes, and how much money the fund makes. Page 30, we're always get asked, you guys got big pensions and we're millions and billions of dollars in debt, and how come you got this kind of pensions? This table at the bottom shows how much pension liability is. If you look at the center one, it's a single rate discount rate assumption, 7.25%. That's the under state law. When the actuaries do their work, they have to assume that your investments are going to make 7.25% return on an annual basis. You see right now, based upon that rate, the total pension liability is $9,840,000, almost $10 million. That's how much you should have in investments to cover all your future pension liabilities. Below that, you see what you actually had. You had $9,054,000. So you were short about $786,000. So if you do some quick math there, you're about 93% funded, which is great. We talk about a lot of the funds. I think the Social Security is about 35%. Chicago teachers pension is about 25%. it goes on and on. So IMRF has got a great, great history, and you guys show that being almost fully funded. Now, if you look to the column to the left or to the right, you see what happens if your investment portfolio does better. If you look to the right, your investment portfolio makes 825,000, I'm sorry, 8.25%, you're going to be overfunded. Okay, you have about 103% funded. Okay, but if you only earn 6.25% on your investment portfolio, you see that your fund then becomes about 78% funded. Okay, so and quite frankly, the legislature in Springfield plays games with this. You know, that rate of 7.25 seems a little high for most people, but that makes it look like your actual amount of money that you're funded, you're better funded than you maybe are. But I'm confident these are pretty good numbers, and it's nothing a taxpayer should be mad about. Next thing is bonds, page 33. How much do you owe in bonds? You start out the year, this is a table at the bottom of page 33, $4,667,000 in bonds. You issued in the next column, $1,592,000, and then you paid off $2,166,000. So at the end of the year, you had $4,093,000 in bonds. Okay, and you see the various, if you look at the table on the left, the various interest rates. The November bond only had to pay 1.89%, a little bit less than 1.9%, a little bit less than 2%. So again, here's the summary. You owed a little bit more than $4 million, almost $4,100,000 in bonds. The rest of the report, again, we talk about, you know, there's more footnotes, the assets and risk management, and then supplementary discussion, supplementary information. We go back to page 48. What's funny in these reports, excuse me, pensions are such a big issue. We used to have like one paragraph or one page of explanation about IMRF. Now, if you take the report, we probably have almost 10 pages because it's such a big issue throughout the country about who's funding pensions, how well funded are we. But anyway, page 48 is your, what we call your special revenue funds. These are funds that you levy real estate taxes for, and you have to use them for a special purpose. The first one, recreation for handicap. Special rec fund, we see that ending balance at the bottom was 321,000, where you spend 179,000 for the year. You look at these figures across the bottom. We always look to see if the fund balance exceeds the amount of annual expenditures. The only one we have there is really to think about is the special rec or recreation for the handicap, where you did spend less than what you were taking in. Tax objectors love to complain about that, so you always want to keep that monitored. Okay, the rest of the report, we talked about the real estate taxes, and the last few pages are the bond schedules. If you want to look to see when your bonds are due, we like to present a comprehensive report. Some CPAs don't put the bond and stuff in there. We like to have it in the tax levy. So if you're going to if you need to know anything about the district financial affairs of the district, you can turn to that report. Okay. Other notes, again, I'm happy to see in talking with Jeff and Sherry as we went through these numbers that the district has been very proactive in cutting expenses because revenues are down. So I think that kept you in pretty good financial condition. In fact, you might be in a little better financial condition than you were without the pandemic. The last thing is the management letter. That's a 2-page letter. If we go to page 2, the first thing there is actually the second one, expenditure threshold. We find over the years in doing audits and working with districts and other governmental bodies that there's always some confusion, some slippage, if you will, that over the years we have different expenditure thresholds, meaning that we give a director or a department head the ability to spend money, and sooner or later, the director goes out and spends $17,000, and one of the board members says, "Who approved that? How come he could do that himself?" So this recommendation is, with your new director and the fact that you haven't looked at the policy in a long time, is you need to take a look at that policy to make sure you understand it and agree with it. You know, Jeff is seems to be a great director and very conservative financially. But some districts feel, well, he's got to earn his way here, so we shouldn't let him just spend $50,000 without approval. We need some kind of approval. Now, the district does have a very well-written procedural manual page that goes through all this. And so my recommendation here is not that we found anything wrong. And this was a change over a year. You had a temporary director for a while. You had a new director. You know, we had the pandemic at the end of the year. So was every piece of document there? No. Was it above average? Yes. Was it acceptable? Yes. We can always do better in documentation, but I found yours to be very acceptable. But this management letter is meant to say, hey, just everybody understand what we're doing here. And you know we have to advertise for bids if it's over $25,000 and things like that. But it's those things under that are significant that we need to be aware of. The last thing is significant journal entries. This is a repetition from prior years. It's one we do basically on all our audits. Under the CPA standards, we're not supposed to make any journal entries. And so when we do make them, we have to give this comment out that we are making them. And again, this is very, very common in a district your size. So in summary, financial affairs look pretty good. The pandemic, as much as it's hurt your services you're rendering to all your taxpayers, it has not hurt you financially. So so far so good, and hopefully we get through this pandemic, we all can get back to our normal lives. And next year when we do the audit, we can actually be on, we like to be at clients because there's a lot of interaction going on when we're there, but obviously this year we didn't have the opportunity to do that. If you have any questions now, I'll certainly address them in the future, whatever. Everyone has my name, phone number, contact information. Call me anytime if you have any questions. I know I have a great relationship with all my directors and all my commissioners. So anytime you need any information, let me know.
Just one quick question. The
Sure.
limit is, or that magic number is any expense, individual expense that more than $25,000 needs the board's approval? Is that
Well,
25?
it has to be advertised in the paper, depending on, there are some exceptions, but let's say that you're going to build a new garage that costs $100,000. And one of the commissioners says, hey, I got a buddy who builds garages. Let's call him. Well, in order to make it fair for everybody and not have any favoritism, the state statute says you have to advertise your bids and you have to give everyone a fair chance to get it. So that's what I mean. So the board would have to approve anything over $25,000.
Okay, thank you so much.
No problem.
Anybody have any questions for Joe? Joe, it's great seeing you. Good luck with the cut.
Yeah, it's like it's my COVID night. I'm gonna go. I told my secretary I'm gonna have the Yul Brenner look, and they said, Yul Brenner, who's that?
Oh boy.
I guess I'm dating myself a little bit, but you never know. Anyway.
Well, we appreciate your time and effort with us, and thanks again. And we look forward to talking to you again in the future.
Okay, very good. There you go.
Thank you.
All right, thank you.
Okay. Let's see here. We're moving along with things. Going back now. We finished the department's director's report. We're on commissioner's report. Do any commissioners have anything they wish to report? I see none. The president has nothing to say either. So we move to unfinished business. Anybody have any unfinished business?
No, sir.
Seeing none, then we'll go to new business as we have some things to discuss. First up, we have the discussion and acceptance of the 2019 annual financial report. The board has recommended to accept the 2019 audit and direct staff to file it with the required state of Illinois and Cook County's clerk's office, as well as make it available for public inspection. We make a motion to accept the report, Director Janda?
Yes.
I'd entertain a motion to accept the 2019 annual financial report.
So moved.
Do we have a second?
Commissioner Janik seconded.
Thank you. Any discussion? Roll call, please.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik,
Aye.
Commissioner Yauer,
Aye.
President Wright.
Aye. Thank you. Next up, we have the discussion and consideration of resolution 2020-10-01-R, estimated amounts of money exclusive of levies for debt service and election costs estimated to be raised by taxation for the levy year 2020. I'd entertain a motion for approval of resolution 2020-10-01-R that we discussed earlier in the finance report.
So moved.
Rich got it first.
Okay,
Oh, okay, seconded. I'll second
Okay.
it.
thank you. Any discussion? Roll call, please.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik, Commissioner Yauer.
Yes.
Okay, Commissioner Yauer,
Aye.
President Wright.
Aye. Next up, discussion and consideration of resolution 2020-10-2-R, creating a First Amendment activities policy for the Streamwood Park District. I know we discussed this on several meetings, and I know that Director Janda's had follow-up discussions with everybody. Is there any discussion? If not, I'd like to move that we approve resolution 2020-10-02-R.
So moved.
Okay, do we have a second? Okay, a second. Any discussion? Roll call, please.
Commissioner Janik seconded.
Commissioner Brogan.
Rogan.
Okay, Brogan seconded. Okay, Commissioner Armstrong,
No.
Commissioner Brogan,
Aye.
Commissioner Janik, Commissioner Yauer,
Aye.
President Wright.
Aye. Next discussion, consideration resolution 2020-10-3-R, establishing the 2021 Board of Commissioners Board meeting, and we already did that, right? In accordance with the Open Meetings Act? No, we haven't. Never mind. I'd entertain a motion for approval resolution 2020-10-3-R.
So moved.
Do we have a second?
Janik seconds.
Okay, any discussion? Roll call, please.
Okay. Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik, Commissioner Yauer,
Aye.
President Wright.
Aye. Next up, we have resolution 2020-10-4-R, authorizing the executive director to execute an intergovernmental and subrecipient agreement for coronavirus relief funds with Cook County. I'd entertain a motion for approval of resolution 2020-10-4-R.
So moved.
Do we have a second?
Janik's got the second.
Okay, roll call, please.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik, Commissioner Yauer,
Aye.
President Wright.
Aye. Next up, we have discussion and consideration of 2021 Paderma Employee Health Insurance Plan. I'd consider an entertained motion to approve the 2021 Paderma Employee Health Insurance Plan.
So moved.
Do we have a second?
Second.
Any discussion? Roll call, please.
Who seconded it?
Janik.
Commissioner Janik.
Okay. Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik,
Aye.
Commissioner Yauer,
Aye.
President Wright.
Aye. Next up, we have discussion, consideration, credential certificate for Streamwood Park District representation of the Illinois Association of Park Districts Annual Business Meeting to be held on Saturday, January 30th, 2021 at 3:30. I know we discussed it already and chose our groups. Should I entertain a motion to approve the people we have representing us?
So moved.
Do we have a second?
Janik,
A roll call, please.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik,
Aye.
Commissioner Yauer,
Aye.
President Wright.
Aye. Next up, ordinance 2020-10-1-0. Ordinance declaring personal property surplus that is no longer needed or useful and that authorization is granted to dispose of the personal property through donation, sale, or recycling personal property. I'd entertain a motion for passage of ordinance 2020-10-01-0.
Move we approve that ordinance.
Do we have a second?
I'll second it.
Any discussion? Roll call, please.
Commissioner Armstrong,
Aye.
Brogan,
Aye.
Commissioner Janik,
Aye.
Commissioner Yauer,
Aye.
President Wright.
Aye. And last but certainly not least, discussion and consideration of authorization to purchase one Toro Sand Pro 5040, 18 horsepower, three-wheel drive with attachments. The total price is not to exceed $20,500. I'd entertain a motion for approval of the Toro Sand Pro 5040.
So move.
Do we have a second?
I'll second it.
Any discussion? Roll call, please.
Commissioner Armstrong,
Aye.
Commissioner Brogan,
Aye.
Commissioner Janik,
Aye.
Commissioner Yauer,
Aye.
President.
Aye. Okay. That concludes new business. I'd entertain a motion for adjournment.
I have one more item for discussion. Everybody knows that I've been on the parade committee for over 4 years, but we had an emergency meeting on October 11th to decide whether they're going to have summer celebration next year, and a lot of issues came up. Now, we have to start planning this summer celebration starting in January, no later than the end of February. So my discussion, and it's only for you to think about it, is that if the village decides they want to go along with it, then we should consider whether it's good for us to let them use Hoosier Grove as a venue for that celebration if the virus is still out of control. We have until February to think about it. We control that, because if we say no to the village that they can't use Hoosier Grove, that shoots it down. And again, it takes a lot of planning, and we had a horrible time getting rid of all of the stuff that we had already planned this year. The beer vendors, the bands, the circus equipment, everything. It was horrendous. So we have to think about it, and perhaps if this virus gets worse come February or so, we may have to make a decision to force them to shut it down and not let Hoosier Grove be used as a venue for the disease.
Do you have a inkling as to whether or not which way they're leaning towards now, or?
What'd you say?
she wants to know if you have an inkling of which way they're leaning.
Right now, the village is leaning towards it, but a lot of issues came up, like, are people going to be interested in coming to the venue next year? Because if the virus is still around, a lot of people are going to stay away. They're not going to make any money on it. But they have to know by at least February, because as I mentioned, a lot of planning goes into it, buying all the food, getting the food vendors in there, getting the chamber to get their vendors in there as well, getting the carnival equipment, getting everything else. And there's only a few of us doing this. Me, Bill Berquist and his wife Diane, and 2 others. The village just depends
I
on
get the
us.
sense that we still are dealing with a lot of incomplete information, mainly not knowing. I mean, we're looking right now that it is picking up. We're also hearing stories that there could be the first batch of the vaccine, coming out at the end of the year. We also know that I think the village is cognizant of knowing the safety issues as well. And I think one of the things too, that in our executive director, he's the one that's really going to be the guide for us. And it's really his call to make. I mean, he could have us give our thoughts on it, but at the end of the day, I think he's the one that's there 100% of the time, with this. And I think it's ultimately his call to make. That doesn't mean he doesn't do that without input from the board. But I just get the sense, Rich, we don't have enough information. I mean, it's good to think about it, but I get the sense that, 2 to 3 months from now, we'll be told a whole different story. We don't know. I mean, I think it's okay to, have it on the back burner right now, but I think we need to see how this is going to be playing out in the next several months. My opinion.
I agree with you because if the vaccine comes out at the end of the year, it's going to be a different story. And if it doesn't come out, then January is going to be just as horrible as any other month, So I think we should wait to see what's happening.
That's all I'm asking, is to give Chu a chance to learn about it, what's going on, and to think about it, because if it gets worse, we are going to have to make a decision.
No, I think the 3 entities, include the chamber, the village, must make a decision together, because I think.
I have to disagree with you, because I talked to Sharon Cadigan, and she says, if you guys shoot us down, we got no place to go. They can go to U46. They can go to U46 football fields, but they're going to have to pay for it.
But Rich, what I'm saying is that I think it's one of the things where you don't want to approach somebody in an adversarial way. And I think, again, we're all going to be dealing with the same amount, the exact same data come in January or February. And I think probably with the same data, everybody will come towards the same conclusion, whether to move forward or not. So I'm just trying to, what I don't want to do is already kind of feel like we're holding the guillotine over their head if we, without having complete data. That's all.
Mhm.
What do the rest of the members think? Adriana, Rick, what are your thoughts?
Yeah, no, I agree with you, Bill. I think in a couple months things can totally change. And I think it shouldn't just be like, it needs to be a collaborative thing, because it's a whole community, not just the park district saying no. Like the whole community should be on the same page.
I agree with you. I just want to give you an update about what's going on.
Yeah.
That's
Rick,
it.
what are your thoughts?
Hopefully this.
I like the information that Rich has told us, but I guess we'll wait and see. It's all a crazy world.
Yeah.
Okay.
I'm hoping it goes away too.
We'll see, like I said, we'll see what transpires. What I don't want to do is make it feel like that we're holding something over them, because we've worked very hard in establishing a great collaborative relationship. And I mean, there's always going to be areas of disagreement on all sides, but what I don't want to do is feel like we're painting them into a corner.
Well, the villages check in with other communities as well to see what they're going to do. And if they're going to cancel a lot of things, then the village will follow suit. That's what I was told too.
Okay. Well, again, I think we'll probably in January, there'll be a lot more information and data that we can, arrive at a better decision. And I also think Director Janda, he'll be on top of it. And I think he'll give us guidance on how we should move forward.
Our next meeting is in January, prior to our board meeting. So
Okay.
I will get as much information as I can from the village.
Okay, thank you. All right. See,
Thanks, Rich.
thank you. Next up, I'd entertain a motion for adjournment.
I move we adjourn.
Second,
I second it.
all in favor? Aye.
Bye.
Everybody have a safe week. Happy Halloween. Joe, thanks again for all your help.
Well, thank you, guys. Have a good week.
You
All
too.
right, bye.
Everyone, thank you. Stay safe. Bye.